Welcome to the Here We Grow podcast. I'm your host, Dov Girnun, and you're listening to the real stories, the bold moves, and the tough truths behind what it really takes to grow your business. It feels like you're more of a friend than a partner. I know when you arrive at our Merchant Capital offices, our famous barrister Mondi just delivers your coffee.
Yeah, I saw that now this morning, man. It feels like home. It's become like second home from the office. We've built up, I think, not just with yourself, Dov, but I think with all of the founders and directors and execs of Merchant Capital, since we started off on a business relationship, but over the years, definitely a friendship have grown. You know, you see a friendship when somebody gets invited to the wedding.
Yeah, and it's such a privilege. So, I mean, you describe yourself as a banker by day, a car guy by night, and a student of everything in between. It's a great explanation. I think we share a passion for cars, so we can certainly, dive into the detail of some of that. But how does this diverse curiosity fuel creativity and problem solving in your banking role? Can you talk me through a bit of what that actually means?
Yeah, I think we have to be open to learn from other industries and sectors. And one thing the automotive sector has given me as a knowledge base, or you can draw so many metaphors from it. So if I look at Formula One as sort of the pinnacle of automotive and racing, you take Red Bull racing as an example. It's a classic example of what's evolving in the world today, especially within finance. But the automotive industry were already involved in this thing from many years ago. You take Red Bull, they're an energy drinks company, but they probably own 30% of the Constructors' Championship for the past 12, 15 years. So you take an energy drinks company that owns a 30% market share in Formula One, and it starts to say, like, what is a drinks company doing in Formula One? But if you look at what they did, is they took all of the best pieces of engineering and automotive competency and applied it in a different way and adapted it, and they became the 30% constructors champions over the past few years. So they took Honda's core competency and Renault's core competency and developed great engines and bought the best drivers, and they became one of the leading F1 teams. And I think if you look at that from a finance perspective, that's what's happening. You take the emerging trend of embedded finance. It's what Formula One did years ago. So I think for me, having the curiosity of and being open to other sectors, other industries, you can adapt to those ideas or philosophies and put it into a financial environment very easily.
Yeah, that's so true. What fascinates me, and I'm more into driving cars than you kind of following or watching Formula One. But I managed to watch the recent movie with Brad Pitt.
Yeah.
What's fascinating for me about that movie was actually technically what goes on behind the scenes.
Yeah.
And you just kind of watch a race and you think these guys are just driving the car as fast as possible. But what goes behind it technically is fascinating. The temperature of the tires and, when to choose your pit stop.
Formula One and the technicalities that go into it. It's also what I took out from the movie also, and I think linked to the conversation with there. If you take the archetype of the personality that Brad Pitt played in the movie, you have to have that little bit of cowboyishness in gaining success. But it's how do you moderate that? You almost need a counterbalance to moderate that cowboyishness to get you the ideal outcome.
And actually, just thinking now about the analogy that you gave around, linking it to fintech or financial services. So, at Merchant Capital, what we try and do is that the end product that our customer actually gets to experience, we want it to just be as simple and frictionless as possible. But what that person doesn't know is the amount of technical work that has actually gone into creating such a simple process. And I think that's your point really about Formula One as well, right? There's just so much that goes on, behind the scenes that actually creates this ability for the driver just to drive.
Yeah, we take for granted the grit, the tenacity of everything. You take any industry for that matter, a bank, a big FMCG corporate, or a big food retailer. There's so much of work that goes on, and the consumer just rocks up. Then we use this word just to consume, and we take for granted all of the stuff that goes on behind it, and lose appreciation for the hard work of the individuals that deliver that to us.
Yeah. So I mean, we've got to experience you as a partner, working closely with you in Standard Bank. And what has been so refreshing, and really why I wanted you on the podcast as a guest, is your ability to really think like a founder inside a big corporate such as Standard Bank, the largest bank on the African continent. And as pragmatic and forward-thinking as they are, they have to have some sort of bureaucracy and red tape within the bank, because at the end of the day, they are a bank. So how have you found yourself thinking like a founder inside a corporation such as Standard Bank, and being so successful in being able to execute and navigate that bureaucracy?
Yeah, I think entrepreneurs generally have a wider risk appetite. They see the invisible rainbow, and they can see the pot of gold at the end of that rainbow. So they're chasing that pot of gold. But working within a big bank, specifically a bank, not necessarily any other corporate, but specifically a bank, I think what I've grown to appreciate on my journey of having built and founded a new business inside of the group is ultimately we are endowed with a very profound trust as a bank. We've got 17 million clients, from billionaires of Africa to the blue-collar worker that's sort of just getting by, to the pensioner that's living on grant. Each of those customers go to sleep every night knowing that when they wake up in the morning, their money is going to be safe. And that took me a while to appreciate, that you're actually custodian of people's hard-earned money and people's life savings. And so you cannot in any way or form apply reckless behavior to that trust. On the other side of that, we've been entrusted with nearly 380 billion rand of shareholder value. And so your shareholder of 380 billion rand is now looking to optimize return. We can't lose that capital. We need to deploy that capital into that which yields long-term benefit. And I think that's where founders sometime, or entrepreneurs inside of big banks or big corporates, they lose what is the trust that the decision makers have. And I think what I've appreciated over the period of time and my tenure at the bank is, once you appreciate that and understand how to frame your entrepreneurial vision within their context, I think that's where the sweet spot lies. If you can get that right in big corporates, definitely you'd be able to garner the support of the decision makers.
Yeah, I think, and it's fascinating, because I guess you got to strike that balance, right? Yeah. And it's almost like you're as good as your last deal, using the cliche, but you've obviously developed demonstrable evidence that you can deliver as an entrepreneur inside the bank, without risking the house, right? And I think that's really the sweet spot that you and other successful intrapreneurs have managed to succeed. But also looking at the bank from the bank's perspective, wearing the bank's cap, is that if they don't have innovation and people who are pushing the boundaries a little bit, and entrepreneurs within the bank, their clients are not going to feel sufficiently serviced. So I think it's a sweet balance that has to be achieved.
Absolutely. If we don't get it right, we die. Consumer behavior is changing all the time. Consumer demands are changing all the time. We always open to competitors. The competitive landscape is so much. We operate specifically in South Africa, which is the largest sort of market that we operate in as a group. We have an interesting thing, is our banking fraternity here is an oligopoly. It's dominated by a few big players. But you go to the rest of the world, it's a much more competitive environment. And so that rate of innovation in global banks is significantly higher than we see in African banks. but there's an appreciation in terms of how well regulated we are. So when you get through crises like 2008 financial crisis, South African banks were one of the best capitalized bank, well-regulated banks. And so the consumer didn't feel as much of that as we have. So I think we've got a good balance in South Africa. I think we can do better as banks in South Africa generally in terms of rate of innovation and rate of product to market. The bureaucracy is real. People that sit on the outside don't realize the processes and stuff that we need to go through. I've grown to appreciate it. It's definitely there for a reason, and it exists for a reason. On an ongoing basis, I think the bank generally is getting better at refining some of these processes and getting into a owner sort of risk managed culture. So it's definitely getting better. The other complexity that we have is the bank is huge and there's lots of decision makers and lots of stakeholders. In one of the things that you have to get right, and if you fail at this, you're never going to get success in terms of intrapreneurship or getting product out to market inside of a bank, is how do you navigate vertical, horizontal, oblong, triangular, a whole lot of different shapes of structures inside of a big corporate. You think about Standard Bank Group, we operate in 23 countries. There's 55,000 employees. Senior management layers run into thousands. It's navigating that organization and getting to the right decision maker and lining up all of the decision makers correctly in order for there to get momentum. And that's where people get stuck. You ask anybody in the bank where they get stuck. It's like, I don't know who to speak to. And you get stuck in the machine and you just circle and circle and circle. So I think one of the things people need to get right in succeeding at entrepreneurship, knowing who the right person is. Don't be scared to start at the top. If the leadership of the organization truly believe in adding value to their shareholders, they would never shut the door on an idea. So start at the top, understand who the true decision makers are, because the gatekeepers below that sometimes do block you. So know who the audience is, who the decision makers are, and try and navigate through that. That's a big challenge, is navigating that organization.
I mean, it sounds like you need almost a master's degree in the organogram of the bank, and as part of onboarding, one should get that, and I'm not sure if that happens. But I think that's such incredibly rich advice for, people who are listening to the show who are either, budding intrapreneurs within a big corporate, but also owners of, for example, fintech businesses that are trying to do partnerships with banks. Because, the general trend now is that there is an appetite by banks globally to partner up with fintechs, where they believe that by partnering up with a fintech, they don't need to build it themselves. Ultimately, they may want to acquire it or license the technology or whatever it may be. But I think there is that trend. And certainly we've been fortunate enough as Merchant Capital to have a great partnership with Standard Bank around some of those initiatives. But if you're the founder or the CEO of the fintech and you're trying to pitch an idea to a bank, I think the advice is the same.
Absolutely.
Find out who the decision makers are. Start at someone at a level where they are a decision maker and have influence, because the people on the ground are the ones that actually need to execute to make it happen. So you need buy-in at all different levels.
Absolutely. And I hope my story is not going to come across as me trying to be some pompous guy, blowing his toot here. But the story is sort of, I was a private banker at Standard Bank. It was at a time where the competitors in the market were gaining traction on Islamic finance globally. And we didn't have an offering. My tertiary education was Islamic finance. My previous roles were in Islamic finance. And I saw the market for this offering within the Standard Bank Group. And one of the things that always stuck out for me was we claim to be the largest bank on the continent and that Africa is a home and we drive our growth. And if you look at the demographic of the African continent, largely are those that ascribe to the faith of Islam. And so in the back of my mind, there was this thought that kept gnawing to say that we can't truly be competitive in this market without having something that speaks to the majority of the demographic. And so I think I took a very bold move, and I went through to, at that point in time, the provincial leadership. They awarded me an ear to say, listen, I want to build this. And one of the things that I learned, probably another lesson for the intrapreneur, is your business case needs to stack up. You presenting to senior leadership of the bank, they want to know how much money you're going to make for them. And that's possibly another area where many people fall flat. We presented the business cases, and I suppose that's where my equity came in. They were like, okay, you want to do this? We're not guaranteeing you a job. We're putting you on secondment. Come and try and build this thing out. And if it works, great. You can then run it. If it doesn't work, the bank is big. The exact words from one of the execs at the time was, don't worry, the bank is big. If it fails, we'll find you another job.
But I'm assuming there was no guarantee. I mean, you took a leap of faith.
Absolutely. And I suppose that's where the intrapreneurial equity comes through, is you didn't have the certainty as to whether the bureaucracy is going to approve at the end of it. You didn't know whether you're going to actually land product in market, but you had to take the leap of faith. So it was definitely two-sided. The bank took a leap of faith with me and said, okay, build this thing out for us. I took a leap of faith on the bank to say, okay, if it does work out, it's going to be mine, and I'll have the opportunity of running it. And that's how the journey started.
It's a great story. So the partnership between Merchant Capital and Standard Bank, bringing Shari'ah finance to South African SMEs, it's a great example of how big banks and agile fintechs can collaborate better to serve their clients. I alluded to earlier, around, this growing trend around banks considering partnering up with fintechs where they think that the 1 + 1 can equal 3. And I think we have a perfect example. What's it been like working with Merchant Capital to bring this to market?
Dov, on a personal note, I think the relationship definitely has been beautiful for us to work with Merchant Capital. We've seen honesty and integrity in the relationship through the years. There will always be disputes. And I think what we've grown to appreciate in the relationship with Merchant Capital is in that dispute, there's equity and an equitable decision-making that we eventually reach on. But I think from a principal perspective, where we see the ilk of Merchant Capital, which is that fintech, agile, young, new business that's emerging on the peripheries of that core financial system, is we know as a bank, and we have grown to appreciate as a big bank, that there are certain markets where we are not playing in, but would become core market as they mature. And we would become distracted if we put too much of energy into those peripheral markets. But we appreciate that they need to exist. They need impetus to grow. They need to mature. So eventually, as you mentioned earlier, we can ingest them either through a merger or an acquisition. So we sincerely believe as a bank, and we've seen it across the board in different partnerships, different equity transactions. We can see it show up inside of the bank with us, looking into Founders Factory Africa, where we believe that this entrepreneurial spirit inside of Africa is growing. Fintech is growing. And so if we're unable to build inside of our big legacy systems and aging tech infrastructure, then let's buy the capability outside or partner with somebody outside. And when that thing is big enough for us to ingest, then we ingest it. So I think Merchant Capital is a good example of that. You guys have put product inside of our distribution network. It's the partnership is working well. And there's so many that we can call on and show.
And I guess hopefully that this almost serves as a bellwether or an example, to both fintechs and big global banks, that there is this potential cross-pollination or synergy that actually can exist. Because I think as fintechs, talking on behalf of kind of fintechs, there's always this concern and fear that the bank's going to start kind of using me as a partner and ultimately either buy me or kill me. And there's always this hesitance and this reluctance that, do I really want to, enter into this marriage because I know we're going to end up getting divorced, and because I'm the tiny little, partner, it's going to end up being, counter beneficial to what it is I'm trying to do. We've obviously been privileged to have an exact, opposite example. And I think, what needs to be true in order for that to happen is that both parties, but certainly talking now as the fintech, you need to make sure that you are just delivering and continuously delivering value and innovation and, kind of trust and, all the compliance and stuff like that, because then the partnership can actually survive.
Dov, you're touching on something, and maybe this is a piece of advice that I'd give through to the fintech that's wanting to partner with a big bank or any small company, whatever industry you may be in. If you want to go into the big market incumbents to partner with them, is don't be fooled into thinking that they don't want to partner. They would definitely be willing to partner, but it's the classic entrepreneurial dilemma is, do I want to give off equity? And I think where you guys have learned also over a period of time, as any other entrepreneur, is you have to give off that equity and be willing to share. So that's the first piece. The second piece is you hear horror stories of people being swallowed up and eaten or demolished by big corporates. And historically, yes, we know that's true. But I think what we're starting to see is globally, is there is a global trend towards more ethical business. You're seeing that come through in our King 4 type governance, our reports to society. Society is holding corporates more accountable to the ethical behavior. So what you're starting to see is big corporates are definitely showing up more ethically in mergers and acquisitions. They're showing up more equitable in these types of transactions with the smaller guy. So in the whole classic David Goliath fight, you're actually seeing David win a lot more often because Goliath is being held to account now.
I think to add to that, the almost the lesson here for the fintech is almost trying to have the discipline and the ability to not be swallowed up completely. So always try and retain that separation. You kind of want to be as a partner and make sure that you're delivering, demonstrable, every single day you're delivering and growing and being accretive and additive to the bank. Because as soon as you become potentially a division or a subsidiary, then I think the chances of being kind of swallowed up and forgotten about, are more possible. So almost keep it arm's length, keep it as a partnership, make sure you're delivering, make sure that it's the value proposition is good mutually. And that way you're able to, kind of keep that partnership methodology going.
Dov, I like to use an example of the blue whale and the suckerfish or the remora. If you think about the blue whale, it's the biggest thing on earth. It moves through the ocean and nobody touches it, and it's scared. And it's scared of nothing. It just swallows up whatever is in its pathway. But that remora, if you look at how that remora behaves, or the suckerfish, it doesn't seek to change the direction of the whale. What it does is it adapts to whatever the whale is doing, and it picks up whatever the whale is throwing in the dust or in the dirt of the water. And that's how it survives and grows eventually. And I think that's what entrepreneurs and fintechs need to realize is, to your point, don't seek to change the bank. Don't try to change the direction of this big behemoth. It's moving in a particular direction. To move that takes a lot of effort. Rather try and operate within its direction and pick up what's in the dirt there, and that's how you'll grow.
I love that. And I also love the fact that Standard Bank is blue. So it's the big blue whale. I'm going to use that. So, I mean, just like kind of digressing a little bit from work and corporate and maybe taking a little bit of a walk down memory lane thing, I'll just share a little bit of a personal story as well. And it's fascinating how, you can see the big kind of global crises that have happened, that have just completely changed businesses and the trajectory of businesses and industries and markets. I guess the two would be the global financial crisis, 08 and 09, and then COVID. My personal story was that I was working in London at a hedge fund. It was my first job. And I was there from, call it 2002 to 2007. And it was fun, and I was young, and it felt like, I was fulfilling all the dreams that I thought I would have. I was in my early 20s, but I always knew that there was something missing.
Yeah.
And, kind of trading in the markets, for me personally, there was no impact. You weren't making a difference because at the end of the day, in black and white, you could kind of see what your profit and loss was, and it was in black and white. You weren't making an impact. There was nothing beyond that. And I always had this kind of underlying feeling that this is not what I wanted to do forever. And when I came back from London in 2007, the plan was actually to go set up a satellite office of the hedge fund that I was working for in London. And I probably would have carried on my career in that market. And, the global financial crisis happened, and the kind of trading that the hedge fund was doing when I was in London was completely obliterated, because we used to kind of trade volatility, and volatility during the global financial crisis went out the window. So there was no ways that I would have survived. It was a little bit of divine intervention. There was no science. It was quite lucky. But intuitively, I just knew that this wasn't for me. And that's kind of when I got into being a real entrepreneur, and kind of, the rest has kind of been history. But it's just fascinating to see how these things that happen globally, as you say, the butterfly effect, can actually have such an effect on people in South Africa.
Absolutely.
Far away from the US housing crisis.
And your story, Dov, is emblematic of possibly every entrepreneur. There was a trigger event that pushed them into a direction. It may have been spiritual, it may have been life circumstance, it may have been a macroeconomic event, but there was some trigger event that pushed the entrepreneur to say, no, I'm not doing what I used to, I'm doing this.
I'm going to do something else. It's the inflection point. I think it's the inflection point. So as a lifelong learner myself, tell me about being a student of everything in between. I've obviously had the requirement and the need to continue growing myself, and never believing that I know it all, and always trying to learn from other people or institutions or study further, whatever it is. I think we share that passion. But what fires up your passion for learning, and how do you kind of use that on a daily basis to grow personally?
So I think there's possibly some religious worldview that shapes that. So there's a tradition that says that you must seek knowledge from the cradle to the grave. So there's definitely a profound religious worldview that sort of cultivates that, at least. The second is, I think, personal reflection for me is, and possibly I'm going to exaggerate a little bit here, but we live in an environment that's near seemingly infinite knowledge. You can go anywhere and the screen never ends. The pages to the Google search just run into zeros and zeros and zeros. So it almost makes you feel as though knowledge is infinite. And so if you don't keep up with the rate at which knowledge is being produced and consumed, you become a redundant cog in the machine. And so the only way you maintain relevance, the only way you maintain business relevance and survive in the new world is that you have to keep up with knowledge. There's new knowledge all the time. There's new economies emerging. There's new sectors of the economy that's emerging. And so if you as a human being become complacent, you become redundant. And the only way you mitigate yourself from redundancy is maintaining knowledge. At least that's my personal reflection.
No, I completely agree. And I think it wouldn't be a podcast if we didn't mention AI and what is going on over there. But I think even more so to what you're saying, you've now got this incredible tool at your fingertips, on your phone, on your laptop, just using ChatGPT or whatever it is. And I think that even more so, you need to make sure that you continue evolving and learning and educating yourself, because the world is just changing at such a rate of a rate of change.
I watched something popped up on my TikTok feed, my FYP one of the nights, that there are teens that are building new businesses completely off AI. So they'll build the entire business case, they'll build the entire feasibility study and everything off AI, and then go and take that entire AI-derived business model and go and put it into market with success. We're seeing crypto billionaires pop up because of AI-led type things. So it's a whole new world, and if we don't keep up with that, we lose.
So, I mean, you mentioned you're a car guy by night. What's currently in your dream garage, and what does it say about you?
My wife fights with me. She keeps asking me, you have these dreams of cars. It's like, where are we going to park all of them? So I think in the dream garage, there's definitely a 67 Shelby. There's definitely a Porsche. There's definitely a Pagani. Probably a Ferrari. My 1979, which is my current, one of my prized possessions, 1979 Toyota Corolla. I don't foresee me selling that. Big JDM fan, so probably throw in a Supra somewhere.
So it seems like it's a nice balance between the classics as well as the kind of the new Ferraris. It sounds like you definitely
the environmentalists will kill me.
Yeah, it sounds like you definitely need a bigger garage. So before we wrap up, I have one last question, and I'm going to pose this question to every podcast guest that I have. So it's quite cliche to say we're a similar age, we're in our 40s. If you were your 20-year-old self, what would you tell yourself? I want to flip that on its head and say, when you're 80, what do you want your 80-year-old self to be able to tell your 40-year-old self about the growth that you have done over the last 40 years that you would be proud of by the time you turned 80?
I think stuff that I would be proud of is definitely having taken that leap of faith, and doing what I did when I did it, and building something that I did. Definitely, I would be proud of that. I think it's something that I look back on and say, I built that. And not many people have the good fortune of being able to do that. I would definitely be proud of the fact that I grew out of my naivety of thinking that I knew everything. One of the things that I needed to learn very quickly is, you walk around thinking you know everything, and only when you engage with a seasoned entrepreneur or a seasoned exec within a big corporate do you realize how little you know, and then seek knowledge from somebody else. So I think the practice of seeking knowledge is something that I'm proud of, and that sort of inherent curiosity to say, I don't know, let me go and find out. So I think those were the two big things that I'd be proud of, is growing out of naivety and knowing that you don't know, and proud of what I've built.
Fantastic. It's been such a privilege. I've learned so much from having you on the show, and it's really been an absolute privilege and pleasure to have you on. And thank you so much, brother. It's been
only
such
a pleasure,
fun.
though. Yeah, it was so much of fun, and I'm happy to be a part of this, and I wish you all of the success with your podcast.